Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 28th of August. All right, some big, sort of pretty big news out of the Fed. Now, I think it was about 6 months ago, they changed, they made comments basically about letting inflation run above 2%. If it did heat up a bit, they weren't so concerned. Now, they've put that into writing and actually also changed the way they're sort of looking at managing policy more towards the labor market, right? Bolstering the US labor market. So this is a bit of a shift, and also included in that they would let inflation run above 2% for some time. They're not really concerned about that. Obviously, that means interest rates probably aren't going to shift in the States for a few years, right? Till they get all this stuff sorted out. I mean, who knows how long this crazy pandemic's going to go for. So with that shift, it's this is good. It's cleared the airwaves a bit more. Everyone knows what the Fed is doing now. It's not about inflation. It's about the labor market. So that'll change traders' focus on what they're looking at. If you come back and look at the dollar index now, check out the price action here around this release. You get a massive dive in the dollar, and then it comes back. This is not really that rare, right? The market is trying to work out what exactly does it mean. At that point, when that announcement is made, right, a lot of liquidity is pulled out of the market. And that's why you see a big sort of shift here in the dollar index. And I'll show the other currency pairs in a second. They just had the same initial blip, right? Now, that could be algos hitting very illiquid markets, and that creates the distortion in the pricing, right? So what basically, in effect, once it's all settled down, the market reads the data again, or the report, and they work out, okay, right, no major change. It's just a shift of where traders need to focus on the labor market more so than inflation, and it's back to where it is. The carnage, though, is already done in the market. So this is why, I keep saying around huge releases. Now, I didn't expect a lot out of the Fed. This is it's a slight shift, right? But that's it. There's no change in policy. So you wouldn't expect a move to be sustained. But what you can see here is you can see a pop in the Aussie, Euro, and we're talking like 80 points on the Euro, right? That's a pretty big spike, and even bigger on Sterling, Dollar Yen. Basically a big knee jerk to the downside. Now, what it's done is it's pushed Dollar CAD down through that support line, and that gives it enough to trigger the stops. And out of all the currency pairs, this one here makes a little bit more sense because Dollar CAD has already been going down, right? We've got this hurricane in play as well, which puts further downward pressure on Dollar CAD. But what we're seeing is oil, right? It's not really running with the as the hurricane hits the coast, right? So oil is falling. Now that's going to put pressure for it to move back higher. So just be aware, we've got a situation here where Dollar CAD is breaking down for good reason, but oil doesn't seem to be following the game. So there may be, if you've already missed getting in here, you can see that the market is respecting that previous support line, which is now acting as resistance. If we see, if it doesn't start to go here, it looks like a very patient trade. We may see that spike up, and that's where all those fresh positions that were put on here as it broke down will be triggered and taken out as it goes back above that line. So that's something to watch as we go through the course of the next 24 hours. So looking at the rest of the pairs, what does this do for us? Well, it's basically when you have support and resistance lines like these reshuffled, right? It just basically reshuffles the support or resistance, right? So here you probably should be widening out your resistance level there on the Aussie. Kiwi, right? I'd just be deleting that one. We've got a resistance line above it. Euro, I'm just adjusting the support line back down to the bottom here. Really, this trend line above is pretty close. I mean, you could be drawing this trend line here. You can see where it's broken above that. That would tell you where the stops have been triggered. You can see exactly the spike through it. Okay, you can even draw that trend line. Sterling, the same. Sterling, as I said, I've been saying all week, it's got massive ranges, which is hard to keep track of. Dollar Yen, you're basically deleting that trend line on the downside. It broke through. This 106.46 may be acting as a little bit of support. You can see it where it's hitting that trend line and bouncing. So that's what we've got. Now, this doesn't give us much. Now, this week has been completely disjointed, right? We've got the economic symposium. We've had the Fed chairman come out, tell us, where their focus is going to be. We've got Hurricane Laura ripping into the States, shutting down the US oil refinery industry. And then we got some politics out of the US as well. Then you got coronavirus, US, China. There's a whole conundrum of different things here. We need them to unwind a bit to see exactly what's going on. If I just bring you back across to the risk on sort of template here, you can sort of see where, the equity markets at the top here are sort of correlating with specific currency pairs down the bottom. That's something to keep an eye on. And what that does is, it doesn't mean you just necessarily run into those pairs and start trading the same way. You need to wait for those key entry levels, but it will highlight which pairs to potentially trade. Okay, makes it a little bit easier than you going through 1,000 different instruments. Sorry, I went to the wrong thing there. And also, if you are looking at the, where's my mouse? If you want to keep an eye on that storm, obviously this is the place to sort of do it. You can check out exactly what's going on, where it is it intensifying, is it falling, et cetera, et cetera. Now, I've had a lot of traders ask me about the interactive map. I believe it's part of the commodities add-on for Metastock. I don't think it's going to cost that much to get. And with that as well, you will get a lot more, a few more live feeds. So coming out of the North American session, right? We've got, let me just get that mouse back. We've got, a bit of an odd one. And this is where things have been a little bit tricky all week as well. Check out the NASDAQ, which has just been roaring, okay? All the tech companies going through the roof. That's now had a slight risk off day, but the Dow, slight risk on. Now that's following the Fed, right? So, you'd expect the equity markets to rally. What the Fed has said means interest rates are going to be low for like a couple of years, right? You'd expect equity markets to run, but you know what? They're not even really moving that much. So there's a bit of a disconnection there, or equity markets getting close to topping out, which is a bit of a hard one to call. Now, while I'm on this page, the oil trade, which has been sort of in play since Hurricane Laura sort of popped its head up, this CAD yen, I still don't know. It's been a very hard trade to hold through a break around 80, 60, I think it was. It's now up 40, 50, 60 points, but this is like 3 days, 4 days. It's a pretty tough trade to hold, but it still seems to be slow. It's a slow burner, right? So just keep an eye on the hurricane updates. I'd say keep tight trailing stops would be the way forward on that pair. Now, just coming back to it, so just give you a bit of a synopsis here, daily market insight. So the markets, to me, still pretty average. We've got so many, as I said, so many geopolitical events. We've got a slight risk on day as far as the equity markets go. Dollar CAD, and this, when you see a pair like this, it has short-term direction down, long-term direction down. This is a telltale sign. Don't just look at dollar CAD. Go into the CAD crosses, CAD yen. CAD Swiss, all the CAD crosses. You'll probably find a diamond in the rough with regards to the entry levels. You can see here, dollar CAD, the next support level to me is sort of like 130, the figure, big round number. It's a fair way off. And we do have this resistance line here, 130, 131, pretty close, right? As I said, this is either an entry to get short, go with that short-term trend, or if you think it's about to flip, then it could be an entry above that level. So keep an eye on that as we go forward. Now, with Fed Chairman Powell out of the way, okay, we're really looking at, we've got actually Macklin, the Bank of Canada governor, has spoken. We've got Bailey, Bank of England governor, speaking there later on. So I think as far as macroeconomics, we've had our main course with the Fed, with Chairman Powell. Market's going to digest that. They'll work out exactly what's going on. If anything, once again, let me just see what page I'm on here. Yep, the right one. If you're really coming back into your dollar index, if you are looking at this pair, let me just shrink that up. So you just want to readjust the highs and lows, get yourself on the latest level, okay? And that's just a little tweak to the top side, tweak to the downside. And we're back sort of mid-range, and you'll see exactly what we're looking at. There we are. So not a lot there. US-China has gone off the news for the moment. There's too many other things for the news services to focus on. They'll come back to that once everything settles down. That's another story they can rely on to get people focused on their services. And outside of that, guys, that's pretty much it. It's been a very awkward week with these main events Thursday, Wednesday, Thursday, Friday. it diffused the market earlier in the week. The hurricane's probably been the major focus. Now that's sort of taking care of business. Fed's out of the way. This could clear or should clear things up next week. And hopefully we'll get a bit of clearer direction here on the dollar. If the dollar gets direction, you make money a lot easier. That's one way to think of it. All right, guys, have a good trade day. Cheerio.